Real Estate with Champions Real Estate Team here at Berkshire Hathaway Home Service Ambassador Real Estate Company. My name is Mark Wehner II, team leader here at Champions Real Estate Team. So every Wednesday we jump on, give you kind of rundown what's going on in the real estate market over the last week. Joining me is Russ Williams with Williams Mortgage. We usually try to start it out with a quick tip. Our quick tip this week is kind of just still on our theme from last week with insurance. Just making sure that your house is adequately covered for your replacement cost. Like I know we talked before. I have a couple investment properties, and I was looking at my policies, and it's one of them is at like $175,000. The other one's at $195,000 for coverage. One's a 3-bed, 1-bath. One's a 2-bed, 1-bath. House. And I'm looking at it, obviously being in the industry. I'm like, I don't think $175,000 is going to rebuild that house in today's market. In today's cost and labor and inflation and things of that sort. So that's something that I'll probably, here in the next couple of weeks, once I get all my roofs replaced and windows replaced and all the crazy stuff that's gone on, at least in my personal, portfolio, I guess if you want to call it that, from the real estate side of it, from our primary residence to the rental properties. And that's the fun of being a landlord, I guess. And so it's one of those things that's what comes along with those, and having, I guess getting down a sidebar here on quick tip is having enough reserves to cover those deductibles, maybe things that might not be covered by insurance. So you got to have those, rainy day funds, no pun intended, obviously from yesterday. So even, yesterday, one of my rental houses, there's water that came in the basement. They have a, where it's more of a storage space than an actual basement, but that's something that stuff may not be covered with insurance, is water intrusion into the basement. It all just depends. So those are all things you got to take a look at, from a landlord standpoint, property owner standpoint. Do you have that emergency fund in place for your primary residence and ultimately for, investment properties and things of that sort. So, it's always a good time to, you don't need it until you need it, type of thing. So, now that we've seen a lot of these incidents show up, making sure you double check with your insurance adjuster, your insurance, agent, and just say, hey, what's my policies? What do I cover? And if you have questions about, what your house is worth, in that manner, say, hey, is $195,000 going to cover that when I can, if you're going to sell that, so what is it going to cost? So give us a holler here at Champions Real Estate Team. We'll give you a rundown and say, hey, that's, for today's market, if something hit, you'd be, probably sufficient in coverage in that, or we can point you in the direction of a contractor that can kind of give you a good, rough estimate of, hey, here's where you'd probably be falling in. Yeah. Hey, $100,000 for this house, you're going to need more coverage, and so it's like, you can kind of cover that stuff. So just basically, the more educated you can be in that situation, because you don't need it until you need it. And then, it's out of sight, out of mind for most people. You get your policy in the mail or emailed to you, like, oh yeah, great. Boom. Yep. Oh, my insurance payment went up, a couple $100 this year. And you don't pay attention to what is that actually getting into, and what your coverages are until you need it. And then you're like, oh gosh, you have that aha moment of like, oh my goodness, now what are we going to do? So just that, kind of a summarize, make sure you got your proper coverage for your properties out there, and, and have a good relationship with your insurance agent. I know I use United Insurance Agencies with Cindy Davis. And so, I call her, and, when I'm doing investment properties, hey, what's the insurance going to be covered to be on this one? And that kind of stuff. So just have a good working relationship with those people, that are in your corner, from that side of it. So, but yeah. Do you have anything you want to add on that, Russ, on that stuff or anything?
I think that's good advice. Make sure you talk with your insurance agent minimally at least once a year to make sure that your coverage is sufficient to replace your house if one of those tornadoes or flood events or life events or climate events happens to you.
Yeah. Yeah. And if you have a question of what that potential replacement cost is, give us a holler here. We can give you a market analysis, or, put you in contact with some of the contractors we work with. So, yeah, let's rock and roll with what's going on in the marketplace here. So let me share our screen. So, we're coming up here on a holiday weekend, folks. So, in my 16 years, holiday weekends, sometimes are crazy busy. Sometimes everyone's out, at the lake, or out with barbecues and stuff like that with their family. And so they're not thinking about buying a house. But then you have that extended weekend that you maybe get some out of town buyers that are coming in and saying, hey, I'm going to be moving to Omaha, going to move into that area. Hey, we got an extra 3 days to go look at houses. So you get some of those serious buyers that are rocking and rolling. So it's kind of a mixed bag of where you're at. So over the last week, we had 507 new listings go live, 437 new contracts written. Our new listings was down. I think what were we at last week? We're about 569. So down about 60 listings from that one. We got 391 happy new homeowners this week. So, in as we go into the holiday weekend, like I said, you typically see some houses come on the market. Some are like, oh, it's holiday weekend. I don't want to deal with it. I don't want to have people in my house. And so sometimes you get a bigger push, after the holiday weekend. I think this last couple of weeks, we just got an accepted contract for one of my clients this last weekend. And I think, because I talked to the listing agent, I was like, hey, how's your activity been? You got any multiple offers coming in? Well, we've only had 4 or 5 showings all weekend. And it was a great house, fantastic house, but we were able to get that house at a pretty good price, and things of that sort. So, we were capitalizing on why everyone's out at graduation parties and, getting ready for summer and things of that sort. You can get out there and maybe get that house that you're looking for, when other people are kind of just sitting on the sidelines, in that side. So 30,000 foot view, 2,771 homes on the market, Omaha and Lincoln area, Douglas, Suffolk County, and the metro area here, just under 1,700. Existing homes is up to 760. Last week we were at 727. So that number is ticking up. Our new construction houses dropped down to 914. Months of inventory 2.2. Our average sold price went up $1,000 from last week. So we'll start seeing some of those prices go up in that regards. But yeah, so I mean, I still think we're seeing some good activity out there in the marketplace. Like I said, going into the holiday weekend, it's kind of a mixed bag. You're gonna have those serious buyers. If one great house comes up, you might get all those serious buyers at one house. You may get 5 offers, 3 offers, 2 offers, and you may get some of those ones that come up, and people just aren't out there. So if you're thinking about buying a house, get out there and look at a house this weekend. And just stay active in the market and stay persistent in it. So ultimately, if you're going to be buying a house, you got to look at what the mortgage rates are doing. So our expert in that avenue is Russ Williams with Williams Mortgage. So what are we kind of seeing in the mortgage side this week, Russ?
Mark, rates have continued to move sideways here. We have about a 2-week period here where we really don't have any significant economic news that's expected to move the markets one way or the other. Usually the first 2 weeks and the last week of each month are the action-packed weeks, and so we're kind of in the middle of a lull right now. But to your point earlier, anytime we have a holiday weekend, we typically see some choppiness in the market, as there are fewer traders and investors on Wall Street, and so that can sometimes have some movement one way or the other. Having said that, though, we're starting to see some forecasts come out for the remainder of the year where they think interest rates will go, and some of the big guys like Fannie Mae and Freddie Mac are thinking rates are going to stay in this general range through the remainder of the year, and that we might see a little bit of short-term rate improvement as we hit September. They think the first Fed rate cut now might be kicked down the road to September, maybe the second in December. Of course, the Fed is continuing to say that they'll be data dependent. And of course, the Fed has a dual mandate of trying to keep employment strong and also try to keep price stability, which means inflation, deflation. And based upon the way that the reports work for inflation that the Fed likes to look at, we don't see a lot of improvement coming on the inflation front, just the way they do the calculation. So that would suggest, if that's correct, that probably the Fed is going to be watching very closely with jobs data. Right now, the unemployment rate's about 3.9%, and 14 of the 17 Fed members that have a voice are thinking that maybe we should stay below 4.1% in unemployment as we head through the remainder of the year. So as we watch, if that unemployment rate goes to 4.1, 4.2%, that might start to rattle the Fed and have them move a little more quickly. Having said that, though, and I don't want to get too long-winded here, they are going to be changing some of their quantitative tightening starting the 1st of June. That may have a little bit of an impact, mostly on treasuries, but if the bond market continues to have an appetite for mortgage bonds, and if we continue to see these projections that rates will stay in this general range for the remainder of the year, we might actually see a little bit of improvement in demand for mortgage bonds, which it might actually bring rates down a little bit. So having said that, though, Mark, we've talked about this many times, it seems like every week. If we see rates drop, that's going to bring more people off of the fence into the buying game at a point in time when home prices are continuing to rise. Mark's been posting some great stuff on his social media sites. I encourage you to follow his team that lays out really nicely how home prices are expected to continue to rise. Is that a guarantee? No. But if we see more demand using those normal laws of supply and demand, we can't catch up with supply fast enough. That demand increasing would likely push home prices higher. So buy the house now at today's price. We've said it before, buy the house or marry the house and date the rate. We'll right size the rate if rates do come down next year.
Yeah, yeah, like I said, so it's a great time. Anytime, don't wait to buy real estate. Buy real estate and wait. I think that's the adage of that side of it. So, but yeah, so I think that's kind of all we have for today. So everyone have a great and safe Memorial Day. And we'll see everybody next week. And if you have any questions, give us a holler.